Good day everyone. On today's video, we'll be talking about consolidation market, how to identify consolidating market, how to make maximum profit out of it, and how to avoid such market to maximize profits and minimize your loss. Welcome back. So now, what is consolidation market? According to these definitions from Google, in a technical analysis, a consolidating market is a market that is neither continuing or countering a long-time trade. Instead, its price is only experiencing range-bound price activity. This is also seen as market indecisiveness. Then another definition here says, consolidation is the term for a stock or security that is neither continuing nor reversing a larger price trend. Consolidated stocks typically trade within limited price ranges and offer relatively few trading opportunities until another pattern emerges. So you can see a consolidation market is a market where the market is in an indecisive mood. It is usually ranging either sideways. It's not a trending market. The normal trending market, we know where a market is forming higher high or higher low, or a lower high or lower low. Or you can say in an uptrend or in a downtrend. No, this market doesn't go anywhere. It always moves sideways. And this market usually comes after a trend. It usually comes after a trend, either in an uptrend or a downtrend. So when you see a consolidation, it means a trend wants to change or it wants to make another movement. If you are in a downtrend and suddenly the market starts consolidating, two ways: either this market wants to continue a downtrend or it wants to change direction entirely to an uptrend. That is what consolidation market is about. I will show you this in a live chart in few seconds. So you see, this right here is an example of a consolidating market. You can see it's just sideways. The market was in a downtrend before. You can see it here. It was in a downtrend before, which sloped down, right? Then all of a sudden, you started seeing a consolidation. Here is just a consolidating market. So as a new trader or a beginner trader, if you don't know all these things, it will end up blowing your account. You can see all this place is consolidating market. So the market was just consolidating sideways. If you remember our definition, we said it's an indecisive market. So there's no decision made here. So it was just consolidating around this area before it finally broke out of the consolidation zone and it went up, right? You can see it was in a downtrend, then it consolidated around this side, then it broke out and went up to an uptrend. So this is just an example of a consolidating market. We'll check for another option, more examples of this, so we can, then I will show you how you can trade with a consolidating market, how you can maximize your profit, make huge amount of profit using this consolidating market strategy, and how you can avoid losing some money while while you see such a market and how you can avoid such market so you can minimize your loss. So let's look for another consolidating market so we can have at least 2 to 3 examples and understand it better. Let's look for another opportunity. Okay. So you can see here also is a consolidating area. Let me mark it out for you to see. This zone right here is a consolidating area. You can see the market was consolidating around this area before its breakdown. You can see all this area was a consolidating area, and if you can look very well, the market was in a downtrend here. The market was in a downtrend. Then it's consolidated around this area. Then it went up. It went a bit down, consolidated down again, and went up. You see, it broke up. You see. So this is it about consolidation. So now let me show you how you can maximize profit with this method. So for beginners traders that still do not understand how to spot a ranging market, so let me make it easy for you. There are different ways to spot a ranging market. Even if you cannot identify it directly by yourself, you can use the likes of the indicators to help you spot this easily. So all you need to do is to go to your indicators. Mind you, I'm using TradingView. So you go to your indicators, type in moving average. Moving average. So you see the first one that came up here is moving average exponential. So you add it twice, 1, 2. So it will come out on the list of your added indicators. After adding it twice, you see it pop out at the left side of your screen. Then you go to the settings, you click on the first one, but you need to edit it to achieve our goal. The length, you change it to 50, and the method, you change it to EMA. You can change the color if you like. You can just leave it this way. It's on blue currently. You can leave it on blue if you like. Then you click on OK. You go to the second EMA you added. Remember, we added 2 EMA. Then you come to your length, you change it to 20. Then the method, you change it to EMA. The style, you can either change the color from blue to any color, or you leave it at blue. So let's just make it for example yellow. Let's make it yellow. Then we'll click on OK. Oh, the yellow is not really visible like that. Let me change the yellow to another sharp color. Okay, let me use either purple or black. Let me use black. Fine. So you click on OK. So now, how do you now know that the market is in a ranging market? Is that you see the 2 EMA comes together. They kiss each other together. You see them gum to each other, not separately like this. You see them together just like this. You see? You see around this side, they are together. So it means that the market ranged this period. So that is how to identify a ranging market using the EMA. We have other methods to identify it. If you want me, I can show you quickly. But if you want to use the EMAs, you can see, you see around this side, you see it together. So it means the market ranges around this period before it broke out. You see it? So this is just for beginner traders that are finding it difficult to identify or to understand when a market is ranging. You see, here is also ranging. It ranges before it breaks out. So that is how to identify this is the easiest way to identify a ranging market. Once it is not together, then the market is not ranging. All here, the market is not ranging. It's either it was in an uptrend or in a downtrend, you can see. But once it is ranging, you see them together. You see it clipped together just like this. So that is it about knowing when a market is ranging or not using your 50 EMA and 20 EMA. So in case you want to add another method of identifying your ranging market, and maybe probably you don't want to use the EMA, or you want to combine the both, you can just go to your indicator and search in RSI, which is the relative strength index. You add it once. Then you go to your editing. You see it pop out at the down. Go to the settings, then you remove the RSI based MA. Then all we need here is the 50 EMA. So you move down to the RSI upper band, RSI middle band. You see the upper band is 70, the middle band is 50, and the lower band is 30. So you come to the middle band and change the color to either, let's make it black. Then the dots, we can change it to line. Then we can make it more thicker to be more visible, right? You just scroll down, go to thickness, and change it to either the middle one. I think the middle one is fine. Then you click on OK. Just like this. So after editing your setting, how do you now know that, okay, a market is ranging using your RSI? How to know that a market is ranging using your RSI is when the MA ranges just between the 50 EMA. Remember, we did our editing where we changed the bands. The 50, we highlighted the 50 band. We make it more bold, which is the middle line here. You see, you remembered. So if the market is just ranging around it without going up or down, just ranging sideways, it means the market is ranging at that moment. Let's check and see if we can spot any ranging market around that. Okay, fine. You see, remember we marked this place as a ranging market. You can see this box here, which is already there. We marked it as a ranging market in before on the previous, right? So, and you can note, if you notice on the 50 EMA down here, it's also ranging around the side. You see, it's also ranging around this side. If you check, just move back and check around, you will notice that market is ranging around the sides. You see, there's a ranging market here also. And if you check your 50 EMA, you see that the market is ranging around that side also. Let me just mark it out for you to see down here. You see, it's not going up or down. It's just ranging around the 50 EMA. So that is how to identify a ranging market using your RSI. You can see we marked here before, also previously on this video. Then if you check down here, you see that the market also ranges around that side. So as a beginner trader, if you don't know how to identify a ranging market, you can use either your MA, which is your moving average exponential, or you use your RSI, which is your relative strength index, to easily identify the ranging market. So now we'll just dive into how to place our trade using the ranging market strategy to maximize profit and minimize loss. So as soon as you spot a ranging market, which we can see right on our screen right now, this is a ranging market. You can see a ranging market. This market is ranging because it's sideways, right? All these sides are ranging because they are sideways. So what do you do when you see a market is ranging? You pull out your rectangular box and draw out the ranging side, right? You draw out the ranging side. You see, just draw it this way. So what will you now do with this after drawing this box? Let's say you came into the market this period and you notice it is ranging. What will you do? You keep extending it as the market is ranging. You keep extending your box until you see a breakout. Especially when there is a retest, it is more stronger when there's a retest. Though sometimes the market might range and break out without a retest and it will go to the next direction. So as far as you have your stop loss with you, you are good to enter the market. So immediately you see a breakout, like in this situation, we see a breakout which is down, right? What do we do when we see a breakout? I'm in a 15-minute time frame right now. This strategy works on any time frame, but you can use it preferably on a bit higher time frame, either the 1 hour, 45-minute, 15-minute, 4 hours or so, but it works on any time frame. If you are a long day trader, you can use it in a higher time frame. But if you are a scalper, you can just use it in a smaller time frame. But make sure you take out your profit almost immediately after the breakout. Just maybe few pips out of your taking few pips after the breakout. So what do you want to do after you see a breakout and a retest like this? You enter this market. Let's enter for a short, right? So you enter for a short market, just like this. You enter for a short market. And what would be your target? If your stop loss is as high as this, for example, let's say your stop loss is as high as 17 pips, for example, what would be your take profit? Your take profit should always double your stop loss. That is when you know you make profit out of that market. So if your stop loss is 17 pips, then your take profit should be around 34 pips, right? If you calculate it right, that will be around 34 pips. So let's go there. So we have 34 pips here. This is double our stop loss. And as you can see right here, we hit our take profit if we use this strategy. We hit our take profit right there. You can see we hit our take profit. So let's look for another opportunity. So mind you, this is a live market currently on gold. So you can let's look for another ranging market to see how it works. So let's look for another ranging market to see how it works, right? Let's try it on a higher time frame. We did it on a 15-minute time frame, right? So let's use the 1 hour time frame now to try it. So let's say here is a ranging market. You can see a ranging market around this side, right? Here is a ranging market, right? This is a ranging market, right? The market was on a downtrend before. You can see it was on a downtrend, right? and here is a range. It range around this side. So I said what you do immediately you see the market ranging is to bring out your rectangular box and draw it just like this, meeting each edge, meeting each candlestick edge, right? You see the last candlestick edge. So once the market, you follow the market at its as the market plays out, you keep extending your rectangle, you keep extending your rectangle to wait for a breakout, right? So you keep extending your rectangle to wait for a breakout. Okay, you see, let me extend this rectangle now. You see there's a breakout right here. So what do you do when you see this breakout? Like I said, you enter for the market, right? Sometimes you see that there's a breakout without a retest. Sometimes the breakout comes in with a retest. You get? So what do you do now in this situation is to enter for the market. You are entering for a buy position because the breakout we see here is a buy breakout. This long green candlestick says it all, right? So we'll be entering for a buy market, which is a long position in this breakout. And I said, how do you set your stop loss on this particular ranging market? Is to set your stop loss right below the ranging area or right below the last most recent candles that form, which is around this side. Let me mark it out for you, which is around this side. Some can just play safe. Some can just play safe this way. Maybe they don't want to take too much risks or so. Some are high risk taker. They can place their stop loss here because the market can still range back to this side and maybe hit you out and continue your direction. So some conservative traders put their stop loss down below the ranging market area where you draw your box, while some would just put it just below the last candlesticks that form, the most recent candlesticks that form before their breakout, which is around the side. So once you enter for this market, like I told you, your stop loss would be below this. If you're putting your stop loss below this, which is around how many pips? Let's check how many pips, like around 20 pips, then your take profit will definitely be 40 pips. So let's make it 40 pips our take profit. So this is 40 pips, right? Let me move this for you to see it. This is like 40 pips. This is like 40 pips. So now we'll be waiting for this market to hit our take profit or stop loss. Yes, that's the reality of trading. It's either it hits your take profit or your stop loss, but the best thing is for you to trust your analysis. Always trust your analysis. If you are 100% sure of your analysis, trust your analysis. Don't use fear to cut your market. Once you set your stop loss and your take profit, forget about the market. It will work out the best way for you. So let's wait for this market to either hit our stop loss or to hit our take profit. So you see, this market just hit our take profit. You see, this market just hit our take profit, right? So that is just how to trade a ranging market. This is the best and easiest explanation I can give you on how to trade a ranging market, how to maximize your profit. If you stick to this profit alone, because if you'll find out that the market usually ranges almost every day. almost every day. Let's say the market ranges just once a week, for example. That's the worst case scenario, right? Let's say this market ranges once a week and you want to use this strategy. And now you can see we hit 40 pips, right? 40 pips, if you're using a larger lot size, for example, let's say you're using a 1 lot size on gold and you have a big capital, that is a huge amount of money in a week. Instead of trading too much, making too much trades and end up blowing your account, why not just stick to a strategy that works for you and maximize your profits? The more you trade too much, the more and the higher chance you lose your money. Make sure you use your snapper entries by trading only when you see the opportunity. It is not how much, it is not by quantity, it is by quality. That is how trading works. Please, if you are watching us for the first time, kindly hit the subscribe button and hit the like button. Share this video so that others can benefit. So let me just do one more examples and we will close for the day. Let's look for one more opportunity and trade. So then we'll close for the day. Let's look for more opportunity after the market has trended, has consolidated. Then we'll look for more opportunity and see. And try not to be selfish while trading. Try not to be selfish, please, while trading. We can see this market now is consolidating right here. So what do we do when we notice this consolidation? You can see there's a bit consolidation here. After this breakout, there's a consolidation around this side. You see, there's a consolidation around this side. I said, what will you do when you see a consolidation? You bring out your box as usual. You draw out your box as usual, right? In this case, you'll see that there's a retest. This is the retest. After the breakout, then a retest happened. Where is the retest? You see, after the breakout, there's a retest here, right? So what will you now do in this situation? You will enter for a buy because the breakout was in an upside. Assuming the breakout was down here, we'll be entering for a sell. Let me draw it for you to see. Assuming the breakout was here, we'll be entering for a sell market. So since the breakout was a downside, then in that case we'll be entering for a buy. What was it? For in an upside, then in that case we'll be entering for a buy market. So let's bring out our. So we'll enter for a buy market and just stick to our rules. Our stop loss will be below, just below the trending area, right? And how many pips is this? 28 pips. So our take profit will be how much? Our take profit will be around 50 something pips. We said 28 pips, right? 28 pips, the times 2 will give us 56 pips. So our take profit will be 56 pips. Let me minimize this so that I'll get the exact. We said 56 pips, right? I can't see this. I can't see it. I'll need to draw the 56 pips here, then take it there because I can't see the screen very well. So we have 50. You can see we have 56 pips, right? So let's take it to our area. We said we're entering immediately after the breakout. So let me expand. Let me expand it so you can see it very well. Let me expand it so you can see it very, very well. So let's play the market and see how the market plays out. So you see, this just hit our take profit. It hits our take profit. You see, still on our 56 pips, and it hit our take profit. You can see it. It hit our take profit. So believe in your analysis and make the maximum profit out of this market. People are making a lot of money in Forex trading. Once you are patient, you will make a lot of money in Forex trading. But if you are not patient, you just want to trade and just make money, you want to make it as looks like a gamble, then believe me, you will just keep blowing your accounts. But make it as a business, and you enjoy Forex trading. Thank you for watching us today. If you have not subscribed to this channel, like I always said, please kindly subscribe to this channel, share this video, like, and tell us what you enjoy about this video and what other topic you want us to discuss in our next video. Thank you and bye-bye.